Today, in our last session, we will speak about Treasury in the context of ESG, which is a topic of obviously increasing importance and also very much so in the Treasury space. I'm very excited about today's session. Today will be in the form of a panel discussion, which will be facilitated by Sebastian Di Paola, our global Treasury leader. And we're very happy to have on the panel representatives from ING, from Metalor, and Nokia, as well as PwC. So thank you for the panelists to make themselves available for this discussion. As always, there's an opportunity to ask questions throughout, so please use the chat for this, and we'll try and see if we can address your questions, time obviously permitting. And also, I do have the request, as we're using kind of a normal Teams environment for today's session, if I can ask everyone to keep their camera off so that we have the panelists up on screen, and also to keep yourself muted so you don't disrupt the flow of the discussion. So without further ado, I'm really looking forward to the session, and I'm handing over, Sebastian, to you to take us through today. Thank you.
Thanks very much, Michiel. Great to have the opportunity to host this session. So indeed, as Michiel said, I lead our global Treasury consulting practice, and so you've got the dubious pleasure of having me as your moderator for the session. But fortunately, I've got a group of really good panelists who are going to take us through this topic of ESG in Treasury. Now, the title was very much focused on financing, but we're actually going to make it a bit broader than that as part of the discussion. So as Michiel said, I think it's completely obvious to all of us that for all of our organizations, the ESG topic it's more than a trend. It's no longer a nice to have. It's accelerated dramatically in the last 2 years, and it's now very much a must have, and almost like a license to operate in business. So it's really feels like the right time for treasurers to start thinking about, okay, what do they contribute then to this not just trend, but to the actions that their organizations are taking. And I think we're going to try to bring out some ideas for you as to where you as treasurers might want to connect to this debate. Obviously, the push on this has come, of course, from regulators and governments. I think that's obvious, and I think many of you will be familiar with the EU taxonomy that has come out recently, and which I suppose helps us in many ways to get away from some of the greenwashing that has taken place in the past. But there's also an enormous push from investors, and particularly institutional investors, and obviously also ultimately consumers. Consumers are much more attuned to these topics, and I think particularly generationally, as a younger group of consumers come through, they're probably even more attuned than their parents or grandparents were to these topics. So this is almost embedded in everything that business does nowadays. So again, a real call for treasurers to get with the program and think about what they contribute. So many of your organizations will have made enormous commitments externally around ESG targets, whether it's net zero, whether it's around diversity and inclusion targets. I mean, there's all sorts of things, whether it's packaging. All of your organizations will have made public commitments in these topics, and it's now really the time to execute, because in many cases those commitments have been made without people actually necessarily knowing how we're going to get there. It's important that we make these commitments, but now we need to figure out how we're going to execute. And again, I think Treasury has a really important role to play. Sustainable finance is an increasingly important topic, and actually how we finance the initiatives that are going to be required in order to meet the commitments that companies have made is also a key topic, and again, an opportunity for Treasury to take the lead. So we're going to explore some of these topics as we go through the panel. So very pleased to have with us today Mayke Geradts, who is Vice President of Sustainable Finance. There's Mayke waving at you. Based in Amsterdam, and so she's going to bring us a little bit more of the financial services perspective, which of course is key for a group of treasurers. We've got Jani Relander, who is the VP Corporate Finance and Treasury and Tax. So Jani also responsible for tax. He has a wide role, but coming very much from a background. So he's the VP Corporate Finance and Tax at Nokia. Jani, you've been at Nokia for 21 years and a veteran of the treasury space. So we're really looking forward to hearing a little bit more from you, and notably around the RCF. So Nokia was an early mover on ESG-linked financing with a KPI-linked RCF that you issued in 2019. So we're looking forward to hearing more about that. We've got Nicolas Carrera, who is the Group Treasurer of Metalor, based in Neuchâtel. There's Nicolas. Many of you will be familiar with Metalor, but some may not. So Nicolas is going to tell us a little bit more about the company later on. They're a refiner of precious metals, and he's going to share with us a very interesting case study on traceability, which I think is a nice example of the role that Treasury can play, looking beyond financing. And last but by no means least, from the PwC team, we have Angélique Weingaertner, a senior manager, long-term with PwC, lots of experience in Treasury consulting. We're very pleased to have Angélique with our Swiss team now, previously in the UK and in France, based in Basel, and she's going to talk to us a little bit about what PwC is or how we look at ESG as a whole, but also how we look at it from a Treasury perspective. So as we said, this is not just about financing, it's also very much about investments and the supply chain. As Michiel said, please do raise any burning questions you've got in the chat, but if you can ask you to keep yourselves muted and to keep your cameras off so that we can see just the panelists. With that, I'm going to ask Angélique to start us off, and we can put some slides up here with a little bit of a framework. Angélique, over to you.
Thank you. Thanks, Sebastian. So as Sebastian mentioned, I'm part of the Treasury team and have been focusing quite a lot lately on the ESG topic, especially in the context of the Treasury survey, which we have done in the last few months, and which highlighted indeed the importance of ESG in the Treasury functions. So ESG is actually a concept that has been used for years, but indeed is becoming more and more important in the current context. Environmental, social, and governance refers to the three central factors measuring the sustainability and social impact of a company. So the environmental dimension is very much around contribution to climate change, right? Impact to the nature, management of waste, decrease of gas emissions, and so on. The social dimension is around the contribution to the fairness in the society, around themes such as diversity and inclusion, workspace, well-being, and so on. Governance is very much around definition of roles and responsibilities, of expectation of different stakeholders, with the main objective to create more transparency and ethical behavior. So the frame that you can actually see on the screen right now has been developed by Strategy End, which is part of PwC. And the objective here is very much for the corporate to look at ESG from the individual dimension and to go to one level down. The idea is not to have an extremely long list of initiatives which are going to be extremely complex to put in place, but to look at this initiative from a pragmatic point of view and what's the impact from an ESG point of view, but then also what's the complexity and the feasibility of implementation. On the next illustration here, you can see an example of a portfolio of initiatives. So here, the initiatives are measured against ESG impact on one side and the feasibility, the complexity of implementation on another side. So this analysis is very interesting because, first of all, of course, it can help corporate to identify where the priorities lie, but then also, most importantly, to make sure that the initiative that they are taking are embedded within the overall strategy and are going to be easy to roll out within the operating model. Now, it is clear, for the last few years that all parts of an organization have a role to play when it comes to ESG. However, and as highlighted earlier, we have done a Treasury survey lately, and it has been made very clear that ESG is becoming a main topic for the treasurers that we interviewed. Now, there is still some question around the different initiatives to put in place and how to make that happen, no doubt, but it's definitely becoming a key concern and a key topic. This, of course, is reinforced by the fact that the regulators, the rating agencies are putting much more importance on the ESG notion as well. And as Sebastian mentioned, the EU taxonomy has actually recommended to recognize the ESG risk rating in the pricing of the funding. ESG rating is actually a topic by itself, because as we can see, or as you have heard of, maybe, there are some ratings developed by rating agencies, there are ratings developed internally, and sometimes with different metrics, basically. However, we do see that there is currently a trend whereby we try to converge in defining a common set of standards to have ratings that you can basically compare to one another and use the same language when it comes to what is it you put behind the ESG rating definition. So the question here is very much how can Treasury get involved from an ESG point of view? So of course, there are some initiatives that Treasury can take as a function, as a department, when it comes, for instance, to diversity and inclusion or well-being and things like those. But then we believe as well that the Treasury Department has a key role to play in serving the rest of the organization. Out of the survey, there are four main topics, four main areas which have been highlighted, whereby Treasury can play a key role in the future. The first one is related to financing, which is basically the use of green financing solution. This is definitely a big opportunity for the Treasury function. It's also a risky one and quite complex. The objective here is for the Treasury to monitor their own targets, but then also to be able to embed the KPI, the result of the investment partners, within their own ratings. The second point is related to investments. Now, we do understand and recognize, of course, that the ESG topic is currently embedded in most of the company's strategy. However, there is now a requirement, a need to cascade that down to the way the investment decision-making process around investment is made, and to consider what can be done with the excess of cash and how it can be aligned with the company's strategy in terms of ESG. The third topic is related to supply chain financing. Now, a company is not standalone when it comes to the ESG rating and outcome results. It's an ecosystem now, because the overall footprint is not only about that company, but about all the different partners within the supply chain. As such, what we have seen, and that we are going actually to discuss a bit further today, is that more and more the corporate are looking at how the suppliers are answering to those ESG requirements. How, what's the rating, which are the initiatives that they take, and so on and so forth. And the last topic is related to the banking partners. Now, what we see slowly, but nonetheless happening, is a trend of corporates looking at extending the requirements and the ESG lens to the banking partners. The key point here is that the corporate want to make sure that they do align their own requirements and the expectation they put on themselves in terms of ESG initiatives with the ones of their partners. So there you go. This is a high-level view, I think, of what is expected and what we learned outside of this PwC survey in terms of ESG.
That's great, Angélique. Thank you so much for that. Hopefully a useful framework for people to take, the overall ESG piece and then start to translate that into what it might mean for Treasury. So maybe now to start to bring that alive with the corporates with the two corporates that we've got on the panel today. So I'm going to ask first Jani and then Nicolas to just say a couple of words about their companies, but more importantly about their companies' overall ESG agendas before we get into Treasury more specifically. So Jani, maybe you want to lead off.
Thanks, Sebastian. So as Sebastian said, I work for Nokia. So Nokia is really nowadays about connectivity and telecom networks. We do mobile networks, IP and optical networks, fixed networks, etc., as well as the related cloud software and services, as well as we have a small but highly profitable patent portfolio and brand licensing business. I'd say ESG is very close to and has been very close to the company agenda for very long, to the extent that our purpose, which is currently to create technology that helps the world act together, really links to and points to technology and connectivity being key solution to some of the world's problems, including climate change, equality issues, digital divide, etc. So very high on the agenda. We've explicitly set ourselves some targets, some science-based targets related to greenhouse emissions, both scope 1, 2, and 3, so both our own operations as well as suppliers and customers. So our products in customers' use and what are the emissions related to that, as well as some diversity, inclusion, and other metrics.
Jani, you've accidentally muted, I think. There we go.
When did you lose me?
Back on now. Just beginning of that last sentence.
Okay. So
only just lost you.
Good. Thanks. So to the extent that our CEO compensation is linked to some of the ESG targets that we've set ourselves. So maybe that as a background on the ESG agenda.
That's great, Jani. Thank you for that. And obviously, Nokia, a household name for many, but good to remind them also that you're now a broader networks business and a broader technology business than maybe the brand that people remember fondly. I might add. Maybe a little bit less of a household name, Metalor, but nonetheless an important player. So Nicolas, do you want to say a couple of words about Metalor, and then maybe, if you wouldn't mind, also saying a word about why Treasury is so important in Metalor, perhaps as compared to other industries, you're sort of closer to the core.
Yeah. So thank you, Sebastian. So for Metalor, what is very important to understand, we are in a precious metal field. So we have on one side the refining. So that's the one who is taking all the supply from precious metal. Then we have two other business who are taking this precious metal to do semi-finish or finished product and to supply that to different goes to from photovoltaic to pharmaceutical components to electricity suppliers like connectors. And for us, it's very important that all this supply, we have the best sourcing practices for the metal. We also work hardly to decrease the emission targets that we have in the company in the last years. And we have also set some new targets for 2030. And also what is now more and more the request from our end customers is to understand the full recycling loop, where the metal comes from, and to be able also with the increasing price of the precious metal. For example, rhodium has only in the last year multiplied by 5. So you can imagine then the people are now looking to get all this metal back and to understand where it goes, where they can recycle properly. And so that's also the trend that we see by the help also of the precious metal price. And on the metal side, on the second part of your question, I think what is very important for us, it's in the treasury, we are in any flows on the financial, but also on the physical side, fully integrated in SAP. So we have all the flow flowing in and the flows flowing out who are integrated in SAP. So that was also the easiest part, having also the precious metal part. So we are tracking down to 0.001 gram all the precious metal who comes in, but we have a financial risk, as you can imagine. But we have also we do not want to lose the metal, so it's very important for us to have that in SAP. And with that, we had the chance to put this supply chain tracking solution on the blockchain that I will tell you a little bit later.
Great, thanks, Nicolas. That's some important context for what you're going to talk to us about later on. So with that, let's dive in then. I mean, I'm always curious as to what's the level of maturity of the conversations that treasurers are having with their banking partners. And I know, Mayke, I'm going to come to you. Obviously, ING has published a lot about its ESG standing and initiatives. I'm interested. I mean, I think we know it's early days for treasurers, right? But are you beginning to get questions about ING's standing as from an ESG perspective from your corporate customers? Is that starting to come yet?
Yeah, I have received a few questions about that indeed, but not as much as maybe I would have expected. Although I think it's also fair to mention that, first of all, ING discloses a lot. So I think for the ones interested, they can also, of course, just go to our website, and there we have full transparency about our environmental and social risk policy, but also, of course, our commitments to align our entire lending portfolio, for example, with the well below 2-degree scenario of the Paris Climate Agreement. So I think there is a lot of transparency, and also when we discuss sustainable finance with our clients, it's always a part of that presentation that we also discuss our own trajectory basically in that regard. So I think maybe we preempt that question kind of, but yes, I have received it, and I think that also, yeah, maybe our corporate clients are becoming a bit more critical, or are asking more questions indeed, to make sure that they are going into business with the right banks basically when it comes to sustainability. And I think for us, it's really important as well to have good sustainability credentials ourselves, because otherwise you would not be a credible partner, of course, in the sustainable finance domain.
And an observation that I would have is that I agree with you. I think it's still early days, as you say, but I think that over time we're going to see corporates more and more embedding these sorts of requirements in their bank relationship policies. At the moment, it's probably more just in the sort of general supplier relationship policy, but I think we're going to see that more in the bank relationship policies. I don't know if Jani or Nicolas, you want to add anything to that.
So from Nokia's point of view, yeah, I think Sebastian, you described it well. So we are not screening our banking partners based on ESG scores or anything like that. However, we are discussing these aspects, and the banks understand that this is high on our agenda. However, and of course, I mean, of course, we are screening the compliance part of things that have always done as part of our sort of compliance process. But on the other aspects, I think not quite yet, but this is clearly something which is on trend and is, for example, discussed among corporates. And I know of some corporates who are screening also aspects like diversity in their banking scoring.
Great, thanks, Jani. I don't know, Nicolas, if you want to add anything to that.
Yeah, on Meta side, I think a little bit like Jani, we are not scoring our banks today, but as we are the perfect middleman, we have a lot of requests from our customers. So our customers want to understand what we are applying as ESG standards. Also, as we are in the middle of the value chains, our banks are more and more requesting us information about what are the standards that we are applying, what type of emission targets we have, and that's also why we released in 2021 the first ESG report. That was information that we always had more than 5 or 10 years, but we never reported that out. And having more and more questions as a treasurer, yeah, then that's the best. If you have a ESG report, then you don't have to have the same speech 20 times with the 20 or plus banking partner that you have.
Right. So getting ahead of those questions a little bit, as Mayke was describing. Very good. So let's dive into, I think, the meatiest topic, which is the topic of ESG-related financing. And Mayke, I'm going to ask you to maybe give us a little bit of a didactic overview, because I think there's sometimes some confusion out there about, the bank lending versus the capital markets, but perhaps even more importantly, the distinction between green bonds versus KPI-linked bonds or KPI-linked lending. So can you just spend a couple of minutes sort of demystifying that a little bit for us and for the audience?
Yeah, sure. I could, of course, spend much more than a few minutes on this topic. This is what I do on a daily basis, the whole day. So, of course, feel free to always approach me with questions if you have any. But indeed, so I think there is, broadly 2 groups of financing available. Indeed, the international debt capital markets. So that's the green bonds, for example, sustainability-linked bonds, sustainable bonds also. And then there is blue bonds, so that those are focused on water. Let me dive into that in a minute. And on the other end of the spectrum, we also have, of course, bank lending available. So then we can think of green loans, sustainability-linked loans. So these are the products basically, or the main products where we see sustainability linked to financing. So I think keep that in mind. That's a big split. And then also, of course, be aware of the fact that the public debt capital market is much more transparent, basically. So everything that is being done is disclosed publicly. So if a company issues a green bond, for example, then the use of proceeds should be used for green purposes. Well, of course, investors really want to know what exactly the company wants to use its money for. So part of issuing a green bond is really essential that you have a green bond finance framework, basically. So such framework is something that banks can assist with. So we have a well-established sustainable markets team that helps our clients to put up such framework to identify, okay, these are, say, the eligible use of proceeds categories if we talk about green financing. And of course, then we align with, say, international standards like the Green Bond Principles. Also very important to mention is the recent introduction of the Climate Alignment Finance Handbook, also by the ICMA. So I think that's really essential. So we always make sure to align with these standards. Then, of course, such a document is being formulated. What are you going to spend the money on? How are you going to keep track of those money flows? How are you going about reporting, basically? And then there's also, say, external verification by a second party that will sign off on such framework, really indeed confirming that, yes, this is in line with international standards and this can be deemed to be green. So this actually gives a lot of comfort to investors. So they take the document as a basis. So that, I think, on the bond side, so these are all things that are publicly disclosed. On the lending side, I think it's much more, of course, relationship based and much more only shared within a syndicate, of course. So if there is a syndicate of banks and we do, for example, a sustainability linked loan, then the relevant documents are typically only shared with the banking group, basically. Unless, of course, a company has a publicly available ESG report, and that would be something, of course, they can share in the public domain. But maybe to keep to some structure in my story. So as said, so bonds versus say bank lending, then we have the green use of proceeds type of products, so green loans versus green bonds. Then there's also the social variant of that. So we can have social use of proceeds with social loans or social bonds. A combination of social and green would be sustainable. And then when we're talking about general corporate purposes, then we're moving into the KPI linked or ESG rating linked domain. So especially on the bank lending side, there's definitely the option to connect your financing to improvement of your ESG rating, as Angélique just mentioned as well. But most of the loans that we do and that we see in the market, so about 75% of all sustainability linked loans are actually connected to KPIs. These KPIs should be material to the business of the company, and they should be ambitious as well. So what we really need is historic data to, first of all, assess how the company has been performing over time. We need audited baseline figures as well. And then, of course, based on that, we're going to formulate annual targets that should be, well, realistic, but still ambitious. And then on an annual basis, basically, we measure if the company has met its targets or not. If so, then they can earn a discount on their loan. And if not, then that might also lead to a premium. So the mechanism basically works two ways. And the same product has now also been introduced in the bonds market with the introduction of sustainability-linked bonds, where there is indeed also, say, a change in the coupon if a client does not meet, if an issuer does not meet its KPI, in fact. So yeah, I think it's a lot about disclosure, a lot about data collection, which is sometimes a big challenge. So I think we've also seen kind of an evolution basically from ESG rating linked loans, in my case, to KPI linked loans, also because companies are maturing basically and are collecting more and more data that they can then use in these facilities. So yeah, I think I will leave it at that, but as said, happy
that's
to answer
great,
questions.
Mayke. That's fantastic. And I think just to pick up on the last point you made, obviously, in general, these KPIs are linked to the commitments the companies have made, right, externally, so that they're tracking the same things for the funding purposes that they're tracking in terms of the commitments that they've made externally. Often, I guess the most common, I guess, is a carbon linked
Yes.
KPI, right?
But I must also say that we often also challenge our clients, basically. So we do not just take any KPIs and accept any type of KPI, right? We need to make sure that it is ambitious. And also increasingly important is really proper benchmarking against peers in that industry, indeed alignment with science-based targets. So I think that is all very important and will only become more important going forward.
And Mayke, I think you have a slide for us, because obviously my next question is, how's the volume evolving? And we've prepared for this one. So I think we'll just put that slide up and you can give us some sense of how volumes are evolving in this space.
Sure. So I think, yeah, this is the slide indeed. Thanks a lot. So I think by looking at the graph, I think the trend is already quite visible. The trend is definitely that it's going up. So we see a very strong growth basically of the sustainable debt market in general. So this includes bonds and loans on the same in the same graphs. Also, to be transparent, these graphs are actually derived from Bloomberg New Energy Finance. So not developed by us, but I think a good reference point. So yeah, as said, strong development. We saw the first green bonds and green loans actually already originating back to 2013. So this is quite a while ago, it feels. ING established its sustainable finance team in 2012. So I think we were slightly ahead of the pack there, where we also introduced the first sustainability linked loan globally in 2017. So this was a syndicated loan actually with Philips, where we connected their Sustainalytics ESG rating to their loan. And since then, I think we have seen the market exploding basically, also because it's quite an accessible product because it is for general corporate purposes. So I think that partially explains the success of this product. But yeah, just in general, I think that we have seen a very strong growth. What is interesting to point out is that during COVID, we actually saw a good growth of the social bond. So as I said, this is really for social use of proceeds. So governments were actually starting to issue social bonds to really also address the impact of COVID, basically, and also corporates alike. So that explains the growth that you see here. Then also, of course, there was the recent introduction of the sustainability-linked bonds. So really bonds where there is a KPI, at least one, sometimes more, connected to the bond. Again, also general corporate purposes. So I think that is also interesting to mention here. And since I'm working on the lending side, I also included a separate graph on the development of the loans, sustainability-linked loans versus green loans. And there we also see consistent growth, actually. So I think at the moment about 15% of all syndicated deals that are being done in EMEA are sustainability linked or green loans. And actually we see this percentage increasing as well. So yeah, I think this is also a reflection of my workload. It's definitely increasing, which is good, keeps us off the streets. But yeah, strong growth in general, I think, and much more to come, of course.
And Mayke, we're all the more grateful that you were able to join us, right?
No worries.
So taking that and then actually taking this, the trend that you're showing. I mean, Nokia, to move to Jani, you were a relatively early mover, right, with your RCF. So Jani, do you want to share a little bit about that experience? And then maybe also potentially talk to us a little bit, are you starting to look at maybe more capital markets type financing in this space as well?
Sure, thanks. Happy to. Yeah, so as Sebastian said, so we renewed our key bank facility, our revolving credit facility, in 2019, 2 years ago, and at that point the KPI-linked instruments were really not in vogue yet. As Mayke showed, there had some had been done, but we were one of the first ones, I think, to the extent that it was sort of featured in Financial Times, which is obviously something that when you normally refinance your RCF, you don't get to be featured in FT. So and now, as Mayke said, half of them or half of RCFs have some sort of link. So quite a change in 2 years. So when we refinanced our RCF 2 years ago, so we decided to link this with our science-based sustainability KPIs. As said, we have greenhouse gas emission targets for the scope 1, 2, and 3, so for our operations as well as supplier and our own products in use. And at that point, used the baseline year of 2014 with the intention of decreasing the emissions by 2030. We actually subsequently, i.e. this spring, tightened the KPI. So we took the baseline to 2019 and said that we would decrease the emissions by 50%. So in shorter period of time, more reductions. Nevertheless, so that is something that I said it's a company level and an investor communicated science-based KPI set, which we tied into the financing, which made it reasonably easy from the point of view that we, of course, have been talking about this with investors and other stakeholders for a while. and this was in a way to tie our financing and put our money where our mouth is on the company sustainability agenda. And as Mayke said, it works so that if we are within our targets on the greenhouse gas emission, we have a margin reduction, a small margin reduction on the RCF margin. If we are not on target, we have a small increase, i.e. penalty in that margin, and that's a reasonably simplistic approach. This is of course externally verified by an independent assurance body, and we report this in our annual sustainability report, our Nokia People and Planet report, which we've been putting out annually for quite a while. So that's essentially what the RCF is, and I think it was a very interesting first sort of occasion to work very closely with our sustainability team, and of course with our in the investor relations and government relations, etc. So I think if you're not doing that already, I think that's something that I would highly recommend. So very, very interesting exercise. On the capital market side, we haven't done anything yet. I would say mainly that is due to the fact that we haven't done very recently anything on the capital market side, but I think it's fair to assume that that we are very seriously looking at least a KPI-linked capital markets transaction when we have refinancing needs. And I think for us, the KPI-linked capital markets transaction would sound like at this point at least a more suitable solution than a green, because of the fact that we have these sustainability targets in the first place, and of course then it's not necessarily that so linked to a specific project and rather the whole agenda of the company in this aspect.
Yeah, so in that sense, you'd rather the funds were not earmarked, right? You want the funds to be available to the company's project work as a whole.
I would say that is
earmarked to a particular.
So the whole company's sustainability agenda, not simply a project related, and of course, as Mayke explained, it also is probably a little lighter in terms of how do you define, how do you follow up, etc. But I know, of course, no decisions, but that's just the current feel.
Yeah, if I may just one addition to that, or a bit more context basically on how we see that from, say, the banking side and also interacting with investors, of course. So as I just showed also, yes, we see an increase indeed in sustainability linked bond issuances. However, I think for a company like Nokia, that could work really well if you have a very strong sustainability strategy, you're very transparent, you have committed to science-based targets. So then, of course, issuing such a product is very credible, right? And also, I think the type of investor, I think that also matters a lot. Like, who are you actually targeting when issuing such a bond? So I think in general, our guidance is that it is still best to align as much as possible with, say, green user proceeds, and to rather go for that approach. And if you go indeed for, say, a KPI-linked bond, then it would be kind of strange if you do not have any sustainable investments against that, right? So I think investors will really look for credibility and that context that should be there. So for Nokia, I fully trust that is there. But I think it's also a word of caution maybe for the audience that this is not a magic wand. It's not the easy way out, basically, if you do not have, say, sustainable investments. So that's also good to keep in mind, and especially what that will do to your, say, your pockets of liquidity, basically, and access to responsible investors.
Very good.
Great, thanks, Mayke. Thanks, Jani. So, and obviously there's also a link to the assurance piece there. That, I mean, I don't want to go into it because we haven't got time, but there isn't like a separate assurance process for the financing. It should really be aligned in the same way that it's aligned to strategy to the assurance that you're getting anyway on the external reporting and on the KPIs that you're reporting on. We're getting tight on time, but Nicolas, I'm keen for you to talk to us a little bit about the case study that you have on the now moving away from financing into the sourcing and the supply chain side. So Nicolas, over to you.
Yeah. So I will quickly tell you here the sourcing and supply chain that we have put. So we have different working on different initiatives for the highest standard to be able to track the metal from the mine or from suppliers to the end product. And the latest solution we put in place with a responsible gold company is this tracking solution. So this tracking solution is quite simple. It's using the blockchain technology. You have a mobile phone. With this mobile phone, you are able from the mine up to the finished product to track that. That means, in other words, you receive a crate with some doré bars inside. You put that in this wood crate. You put a RFID sticker on the top. You close it, and then you are able to track that from, in this case, the IM Gold mine in Suriname, via Amsterdam, via Zurich to the Metalor facility. And then when you come inside Metalor, you are able to track that in SAP in the different processes. It's what you will see here on the right. I think if you then go to the website, you can see that we have even a small video. If now we move to the next page, I can explain a little bit more. What we have also added there, a second level of control. Today, what we have also done is we have worked with the University of Geneva and Lausanne to put here a new layer of control. So we have created this geoforensic passport. So what is that? In fact, is a scientific compliance. So we are taking different points of different mining doré who is coming in, and then we are able to track that in the different points that you see here. So for example, this Rosbel mine is a big field with 7 different pits, and you can see each of the pits, if of the lot of the pits is making a point. In this case, you have these blue points, and you see that the lot was arrived in our example with this blockchain solution was a lot of 259 kilos, and this was this red point in the blue line. And so with that, you're also able then not only to say that the origin of the metal comes from Rosbel, but even to allocate that further to a pit. And this is the solution that we had. The implementation to have that in place from day we discuss was quite quick, 5 months in total. And we have sold this to some different watch and jewelry companies who are willing now today to be able to track the gold from the mine to the end product.
And Nicolas, that's great, and that's a brilliant example of Treasury being involved in something that is far beyond its traditional remit, because you're really helping the company to look into the full supply chain, right? Which is which is a great expansion of the role of Treasury, right?
Yes, exactly, and as such as well for on the premium of the precious metal. That means out of you have different layers. That means you have to do segregation of the refining and that, but you're also able to show a better premium, so to increase the profitability of the company with this solution, and the tracking also for the end customers, with these days more and more important for them, and to have that not on paper. Then a lot of solutions are today on paper, but you have that on the immutable chain, a blockchain, and you can go there and see that at any time.
Great, Nicolas, thank you. A great example of where Treasury can bring value by really beginning to look at the initiatives in the core business, and where Treasury capability can contribute. Now, as the more discerning amongst you will realize, we're at the top of the 45 minutes, but I'm going to make an executive decision and take an extra 5. So please hang with us if you can. Our next topic is around the investment management side. I don't want to take too long on this, but maybe what I'll do is I'll go straight to Angélique, because I know that for Jani and Nicolas, it's still early days. You haven't yet updated your investment management, your policies for investing excess cash, but I know that's coming. But Angélique, maybe you can just give us a couple of words about what we're seeing from the PwC side, from our survey and maybe our other market intelligence.
Yes, of course. So actually, the survey is indeed, as we mentioned earlier, highlighted the fact that ESG is a key topic. and in some extent has been embedded in policies, in the treasury policies and or in the global policies of the firm, of the company. However, what the survey tells us as well is that 55% of the treasurers who have been interviewed have stated the fact that they are not taking the ESG topic into consideration in the decision-making process for the investments. And we believe that there is a clear opportunity there to look at these ways of working, to indeed embed that, as I mentioned earlier, in the strategy of the company and cascade that down to the strategy of the treasury function and to the decision-making process of how investment can be made. Now, we do believe that there is a trend that is going to be enforced, that is going to happen in the coming years, because we do see things such as responsible investment, sustainability funds, and we see that decisions start to be made around what type of investment can be made, and different angles and thinking process are behind those investments, such as positive selection, engagement, and activism. So basically, what we say is that now it's not the big topic, but there is definitely a trend there, and then an opportunity for the treasury functions and the companies.
And a desire clearly to avoid that all of the good stuff the company is doing is somehow a little bit marred by then investing in something that ideally you wouldn't have because it wasn't in line with the company's overall strategy and values. So I think we'll see more of that in the future. Now, in closing, what I want to do is ask each of our panelists to choose between two questions. And I'm going to go to Angélique first. The two questions are, so, is there an angle that we haven't covered? I'm not asking you to then go into the detail of it, but what from your perspective are the angles that you think are interesting from a treasury contribution to ESG perspective that we haven't talked about? Just call them out. Or if you'd rather, what's your final piece of advice for the treasurers who are listening to us, who are just beginning to embark on this journey? So Angélique, if you could go first, keep it very short.
Yeah, sure, very quickly. I think there are two topics that are very interesting from a treasury roles point of view. I think the first one is very much the involvement in the ESG rating. So the way to define that rating and the metrics behind it and to monitor it. There will be an increasing need in terms of, we mentioned that, documentation, audits, insurance around how this rating is put together, but then also the evidence of the figures which are going to be provided. Plus the Treasury is working with the rating agencies on many other topics, whereby, it will be an interesting way to also work with rating agencies on challenging the outcome of the ESG rating. I think that's one. And the second one is probably also an increased opportunity for Treasury function in the trading and the centralization of carbon certificates. That could be one of the initiatives that can be put in place by the corporate. And there is definitely a role for Treasury function to play on that topic.
Great. That's brilliant. Angélique, thank you. Jani, do you want to go next?
Sure. I'll take the second question. I would say be proactive on this topic if you haven't already. I think this is a great opportunity for Treasury to shine internally and externally. So talk to your stakeholders, talk to your investor relations, government relations, to your CFO, to your sustainability teams and rating agencies and banks and others to either link to what you're doing to the company strategy or to if possible, even drive if that's not happening already. So I think proactiveness in this area, I think would be very interesting and well seen.
Spot on. Thank you, Jani. Nicolas?
I mean, I have taken the same than Jani, but I could add something there. For me, I think you have to look a little bit what your partners, means banks, customers, and suppliers needs will be and future needs, and it's also to prepare your company for what are the requests who are coming in the pipeline. And often we are not looking at this, and when they arrive, then you have only a very short time period to implement them. So it's better to a little bit forecast that, as I think it will be a topic that in the next years will be on the table more and more. And we see that already from banks who are requesting more and more information. At least on the commodity side, that's more and more that we have now to show this information to any of our commodity partners.
Very good. Excellent. Thanks, Nicolas. And closing word to Mayke.
Yeah, thanks. I fully agree with what the panel colleagues have said, but maybe also to add to what Nicolas just said, I think also regulatory developments, keeping an eye on that, and also from that perspective, increasing disclosure requirements, I think that is really important. Maybe another thing, we haven't really spoken about climate risk as such, so really transition risk, physical risk, what is coming your way, and how might that also impact basically the way you need to look at financial reporting. I think that could also be a nice challenge. It's still an area that is quite nascent and with a lot of questions and few answers at the moment, but I think this is definitely also something that will come your way.
Brilliant. Mayke, thank you. And with that, I'll close the panel there. Hopefully we've given all of you in the audience some good food for thought. And I would definitely follow what the concluding thoughts were around engaging now quickly with this topic, or you're going to miss a really great opportunity to steal Jani's words, for Treasury to shine. So that's great. Again, thanks to all of you for joining. A big thank you to Angélique, Jani, Nicolas and Mayke for being part of the panel today. As you can tell, we could have gone on for a lot longer. Apologies for going slightly over time, but I see from the fact that most of you are still on that seems to be okay. So hopefully that's a sign that it was interesting. Thanks to all of you for joining. Stay safe, stay healthy, and go and talk to your ESG colleagues. Thanks very much. Bye-bye.
Thank you.
Bye.
Bye.
Bye.